Group 2, and we will talk about PSAK 57. Here are the outlines.
This PSAK will be presented in 8 parts. The first one is introduction. In this part, Thania, will give explanations about objectives and definitions of provision, contingent liability, and contingent asset. Next, Sakina will continue with elaboration on what terms or condition we should recognize provision, contingent liability, and contingent asset. Dewi, as the third speaker, will explain how we measure these 3 items and how do we determine the best value. The measurement part will be continued by Mazaya, and she also will talk about the reimbursement, changes in provision, and uses of provision. To give more understanding about this PSAK, Irvana will elaborate the application and rules of what Sakina and Dewi has explained before, which are the recognition and measurement. Alifah then will explain about the disclosure and also the comparison between the old and new PSAK 57. And in the end, Thania, will tell you some of the highlights of this PSAK 57 and the conclusion. Now, without further ado, let's begin this presentation.
Hello everyone, my name is Thania H. Indriati. I will start this presentation with explaining what is it about the PSAK 57. So the first one, the objective of PSAK 57 is to set the criteria and rules for recognition and measurement of provisions, contingent liabilities, and contingent assets, and also disclosure for those items. So I will explain the 3 items of this PSAK. The first one is the provision. Provision is liability of uncertain timing or amount. Liability means present obligation from past events, the settlements of which is expected to result in an outflow of economic benefits of an entity. The point is, the occurrence of past events or obligating event that gives rise to an obligation has to be there, so that no past event means no obligation or no liability. The past event itself might create legal obligation or constructive obligation. Legal obligation arises from contract or some other operational law such as court decision. The constructive obligation arises from some entity's actions such as from established practices or some statement of acceptance of some responsibilities. Those obligations will be used to determine when we recognize provision that will be explained later by my friend Sakina. The second one, the contingent liability. The contingent liability is either possible obligation that arises from past events and its existence will be confirmed by some uncertain future events that are not wholly or fully under company's control, or present obligation that arises from past events but outflow of economic benefits is just possible or the amount cannot be measured reliably. The third one is contingent asset. It is possible asset and whose existence will be confirmed later by occurrence or non-occurrence of some future events out of entity's control. This is the end of the definition part. The next part will be presented by my friend Sakina.
Hi, my name is Sakina. As previously explained by Thania about definition of provision, contingent liability, and contingent asset, now I will explain about recognition of provision. Provision can be recognized if all criteria are met. There are 3 criteria. The first one is there needs to be a present obligation from past event. And the second criteria is there needs to be a probable outflow of economic benefits. And the third criteria is there needs to be a reliable estimate. If all conditions are not met, the provision is not recognized. If only 2 conditions or 1 condition are met, the entity just disclose the contingent liability or do nothing if the probability of outflow of benefits removed. Now, I will explain this criteria in further detail to see how they can be applied in practice. The first criteria is present obligation from a past event. From this rule, we have to identify 2 important parts. The first one is type of obligation and the second one is the requirement for it to come from a past event. There are 2 types of obligation. The first one is legal or contractual obligation that arise from a court case or some kind of contractual arrangement, and the second one is contractive obligation that arise from entity actions that set an expectation through an established course of past practice. For example, company make a statement will restore the environmental damage. The company will have a constructive obligation because it has created an expectation from its publications, practice, and history. In fact, there is no difference between provision created by legal or constructive obligation regarding to accounting treatment. However, if we identify the underlying obligation, whether it's legal or constructive, that may help us to identify when to recognize the provision. Past event. The obligation needs to have arisen from a past event, which are separated from the entity's actions in the future. For example, the cost of restoring environmental damage that must be paid for and resulting in an outflow of resources to complete the obligation, regardless of the entity's actions in the future. The second criteria required is that there needs to be a probable outflow of economic resources. There is no specific list of what percentage likelihood is required for an outflow to be probable. A probable outflow simply means that it is more likely than not that the entity will have to pay money out. Based on this table, we can identify whether the company needs to do recognition or not. If the outflow is probable, then the company could recognize the provision. But if the outflow is possible, then the company just disclose the contingent liability. The concept of contingent assets is similar to the concept of contingent liability. The key difference is that a contingent asset is only disclosed if there is a probable future inflow rather than a possible one. The third criteria is the reliable estimate. The reliable estimate of outflow of economic benefits is required to settle obligation. In extremely rare case, when the reliable estimate cannot be made, but the liability exists, then the liability cannot be recognized. The next topic is about measurement and will be explained by Dewi.
Sakina have explained to you about the recognition of provision. Now, let me introduce myself. My name is Dewi Anis, and I will explain about the measurements of provisions. So, the amount recognized as a provision should be the best estimate of the expenditure required to settle the present obligation at the financial reporting date. That is, the amount that an entity would rationally pay or to transfer it to third party. The question is, how we determine the best estimate of provisions? So, the estimate is made by the management of the entity, but still, in light of all available evidence, including the received after the end of the financial reporting date, and may be supplemented by the evidence of independent experts. The amount is typically determined by estimating the future cash flow required to settle the liability and discounting them to their present value. According to PSAK, there are three conditions that create the different method to measure the best estimation value of provisions. The first one, provision for large population of events, such as warranties or customer refunds. They are measured at the probability weighted expected value. An example, an entity gives a warranty claim of repairment. If the defect detected from all products sold is classified as a minor defect, the cost of repairs is 1 million rupiah. But if there are major defects, the cost of repairs is 4 million rupiah. The past experience of entity and future estimation indicate that in the next year, 75% of products sold do not contain defect at all, and the 20% of products sold contain minor defects, and the 5% of products sold contain major defect. So, the expected value of repairment cost is 75% multiplied by 0 plus 25% multiplied by 1 million rupiah plus 5% multiplied by 4 million rupiah. So, the value of provision is 400,000 rupiah. The second condition is when all possible outcomes are equally likely of occurrence. Midpoint of the range is occurred. Why? Because the outcome have an equal probability. Example, entity face a legal claim and they expect the lawsuit to settle in the range of 1 million to 4 million, and no one outcome is more likely than other. So the analysis is where there is a continuous range of possible outcome, in each point in that range is as likely as any other, the midpoint of the range is used. In this case, the midpoint is 2.5 million rupiah. The third condition is when the provision for one-off events such as restructuring environmental cleanup, settlement of lawsuit, etc. This kind of provision should be measured at the most likely amount. Why? Because the individual most likely outcome with the greater probability may be the best estimate of the liability. Example, an entity faces a single legal claim with a 40% likelihood of success with no cost, and 60% likelihood of failure with a cost of 1 million rupiah. The analysis is the provision relates to single event. Paragraph 40 of PSAK 57 indicates that the individual most likely outcome may be the best estimate of the liability. However, even in such a case, the entity considers other possible outcomes. But in this example, there are only two possible outcomes, and it is more likely that the cost of 1 million will result, and therefore a provision 1 million should be recognized. Keep in mind that those methods of measurements are valued at discounted present value using pre-tax discount rate that reflects the current market assessments of the time value of money and the risk specific to the liability. The further explanation about the measurements will be explained by Mazaya Safira. Thank you.
Hello, my name is Mazaya Safira. As previously explained by Dewi about the measurement and in-best estimate, I'm going to explain more about the measurement, reimbursement, changes in provisions, and the use of provisions. The first one, I'm going to explain about the risk and uncertainties. The risk and uncertainties that happen in many events and circumstances shall be taken into account in reaching the best estimate of a provision. Risk describes a various outcomes. You should be careful in making judgments under conditions and uncertainty, so that income or assets are not overstated and expenses or liabilities are not understated. However, uncertainty doesn't justify the creation of excessive provisions or a statement of liability. For example, if the projected costs of a particularly adverse outcome are estimated on full of carefulness, the outcome is not then deliberately treated as higher than what is real. The next one, I'm going to elaborate about the present value in measurement. If the effect of the time value of money is material, the amount of a provision shall be the present value of the expenditures expected to settle the obligation. The next one, I'm going to elaborate about the future events in measurements. Future events that may affect the amount required to settle an obligation shall be reflected in the amount of a provision where there is sufficient objective evidence that they will occur. For example, an entity may believe that the cost of cleaning up a site at the end of its life will be reduced by future changes in technology. The amount recognized reflects a reasonable expectations of technically qualified with all available evidence about technology that will be available at the time of the cleanup. Thus, it is appropriate to include the expected cost of applying the existing technology to a larger or more complex cleanup operation that has previously been carried out. For the next one, I'm going to explain about expected disposal of assets. Gains from the expected disposal of assets shall not be taken into account in measuring a provision. Instead, gains on expected disposals of assets will be recognized at the time specified by standards. I'm going to explain about the reimbursement in provision, contingent liabilities, and contingent assets. Where some or all of the expenditure required to settle a provision is expected to be reimbursed by another party, reimbursement shall be recognized when and only when it is virtually certain that reimbursement will be received if the entity settles the obligation. The reimbursement shall be treated as a separate asset. The amount recognized for the reimbursement shall not exceed the amount of the provision. In the statement of a comprehensive income, the expense related to a provision may be present net of the amount recognized for a reimbursement. In some cases, the entity will not be liable for the cost the third party fails to pay. In such a case, the entity has no liability for those costs and they are not included in the provision. I'm going to explain about the changes in provisions. Provisions shall be reviewed at the end of each reporting period and adjusted to reflect the current best estimate. If the outflow of resources to settle obligations is not likely to occur, then the provisions shall be reversed. Where discounting issues, the carrying amount of a provision increases in each period is recognized as borrowing cost. The last one I'm going to explain is about the use of a provision. A provision shall be used only for expenditures which is directly related to the objectives of forming the provisions. For the next topic, my friend Irvana is going to elaborate more on the application of the recognition and measurement requirements for 3 specific cases as written in PSAK 57.
My name is Irvana, and I'm going to elaborate more on the application of the recognition and measurement requirements for 3 specific cases as written in PSAK 57. Now, the first case is, should the provision be recognized on future operating losses of an entity? The answer is no. Future operating losses meet neither the definition of liability nor the general recognition criteria of provision, which we have stated earlier before. Furthermore, an expectation of future operating loss that may incur is an indication that certain assets may be impaired. Therefore, entities should refer to PSAK 48 on asset impairment. Now, the second special case is when an entity is involved in what we call as a onerous contract. There are many contracts, such as routine purchase orders or etc., that can be cancelled easily without having to pay any compensation fees or fines to the other party, which means there are no obligations. Some other contracts, on the other hand, establishes both rights and obligations for each of the contracting parties. The standard defines a onerous contract as a contract in which the unavoidable costs of meeting the obligations under the contract exceed the economic benefits expected to be received under it. Where events make such a contract onerous, the contract falls within the standard because liability exists, which is then recognized and measured as provision, using the lower of cost of fulfilling or the cost of the penalty. Now, the third case is restructuring. Now, these are the example of events that may be categorized as restructuring. Simply put, restructuring is a program planned and controlled by the management that changes scope or manner of a business. Provisions for restructuring costs are then recognized only if the general recognition criteria for provisions are fulfilled. Now, I'm going to explain how the general recognition criteria apply to restructuring. First, a constructive obligation to restructure arises only when an entity has a detailed formal plan for the restructuring, identifying some information, and second, has raised a valid expectation in those affected that it will carry out the restructuring by starting to implement that plan or announcing its main features to those affected by it. Now, for a plan to be sufficient to give rise to a constructive obligation when communicated to those affected by it, its implementation needs to be planned to begin as soon as possible and to be completed in a time frame that makes significant changes to the plan unlikely. Now, the second is a management or board decision to restructure taken before the end of the reporting period does not give rise to constructive obligation at the end of the reporting period unless the entity has, before the end of the reporting period, started to implement the restructuring plan or has announced the main features to those affected by it. And the third condition is that no obligation arises for the sale of an operation until there is a binding sale agreement or other proofs that the entity is committed to the sale. Now, so until there is a binding sale agreement, the entity will still be able to change its mind and indeed will have to take another course of action if a purchaser cannot be found on acceptable terms. Now, lastly, a restructuring provision shall include only the direct expenditures arising from the restructuring, which are those that are both necessarily entailed by restructuring and not associated with the ongoing activities of the entity. Entity cannot include such costs as retraining staffs, marketing, or investment in new systems, because those expenditures are not considered as liabilities for restructuring at the end of the reporting period. Now, from the standards of restructuring, we can conclude that the entity can only recognize obligations or provisions when it is certain that the entity won't back down or won't change their minds regarding their restructuring plans. Now the next topic is about disclosures and comparison of the old and new PSAK 57. It will be explained by my friend Alifah.
Hello, my name is Alifah and I will explain to you about the disclosure of PSAK 57 and the comparison of the previous version of PSAK 57 and the newer version. So for the first topic is the disclosure. So for each types of provision, an entity must disclose the carrying value at the beginning and end of the period, the additional provision during the period, including increased value of the recurring provision, the use amount, which is the amount accrued and charged to provision during the period, the unused amount reserved during the period, and the increased present value during the period due to passing of time and changes in discount rate. Moreover, an entity should also disclose a brief description regarding the characteristic of the obligation and an estimation of when economic outflow occurs. An indication of uncertainty regarding the timing of the outflow if needed in order to provide adequate information. An entity should also disclose the main assumption of future events forecasted. And the last one is the estimated amount of reimbursement, stating the amount of asset that has been recognized for the expected reimbursement. Okay, next I will explain to you about the comparison of the previous and the new version of PSAK 57. I will explain to you in three components, which are scope, transitional requirements, and the appendix. So the first one is the scope. In the previous version of PSAK 57, obligation is estimated and contingency arises from financial instrument, whereas in the new PSAK 57, it is omitted. So in the previous PSAK 57, financial instrument including warranty is not recorded in fair value, whereas in the newer version of PSAK 57, it is not applicable to financial instruments including warranty in PSAK 55 scope. And the last one in the scope component is the estimated liability, contingency liability, and contingency asset of insurance company and insurance policy is included in the previous PSAK 57, whereas in the new PSAK 57, it is omitted. So the next component is transitional requirements. In the previous version, it gives an explanation on accounting changes, does not refer to PSAK 25 on accounting changes and errors, whereas in the new PSAK 57, it is removed. And in the last component is appendix. The previous version does not include an appendix, whereas the newer version, it gives an appendix on example on refund. Okay, for the next topic, my friend Thania will give a conclusion on our presentation.
Hello guys, back with me again. This time I will present the summary of this PSAK 57. The first one, we can determine whether it is provision or contingent liability by the existence of present or possible obligation and the requirement of an outflow of resources. If there is a present obligation that probably requires an outflow of resources, then provision is recognized and disclosure is required for the provision. If there is a possible obligation or a present obligation that may, but probably will not, require an outflow of resources, then no provision is recognized, but disclosure is still required for contingent liability. But if the likelihood of an outflow of resources is remote, no provision and disclosure is recognized and required. In extremely rare case, contingent liability arises if there is a liability that cannot be recognized because it cannot be measured reliably. Therefore, the disclosure is required for this. To make it easier to determine provision or contingent liability, we can use this decision tree. Next, it's not a contingent asset if the inflow of economic benefits is virtually certain. If the inflow of economic benefits is probable but not virtually certain, no assets is recognized but disclosure are required. On the other hand, if the inflow is not probable, nor disclosure is required.
And now, for the conclusion, this PSAK is a normative and positive accounting theory. It is a normative accounting theory because, as it is stated in its definition, this PSAK prescribes the criteria of when we recognize and how we measure provision, contingent liability, and contingent asset. It helps us enhancing the true decision usefulness for others to make a decision. But it is also a positive accounting theory because we need to estimate or predict the best value for the provision. We count the probability of occurrence of future events, and we also need sufficient objective evidence that they will occur.
Okay everyone, that's all from us. We hope you will understand more about this PSAK. Make sure to give us feedbacks below to help us improve ourselves so we can make more of this. Thank you and have a nice day.